conversation today. All right. Let's see here. Whoops. That's not what we want on this tag. Grr.
What is Ford doing there? It's got a massive green bar on it.
Ah, yes. Got some range. I think we're going to sit right in this range between about 1325 and 1315 on the open here. And we should be getting an answer to a trend soon too, so this could actually break a little bit today, depending on what SPY does. It's got a tendency to follow SPY.
So am I right in thinking then, if Ford decides to go bullish, then I need to be selling my call?
Right.
Is that correct?
So
Leg of my strangle, sorry.
You've got two ways to close this, and then also you can open it again later. But you can go and close the whole position if the whole position is net positive or net profitable, or you can go and leg out of each position on the price action. So if it starts to swing in a channel, you can sell the call to close it on the price high, and then sell the put to close it on the price low.
Yeah, so price high is when the price goes up.
Right.
You sell the call, correct?
Correct.
Thank you.
Now we've got a nice 1 minute evening star here. That's going to set up our range, and we'll watch for about the first 15-minute candle to see what the range is likely to be. All right. Trying to multitask here, and it's just not working well.
That's a lot of volatility in Ford, isn't it?
Quite a bit for today. It looks like it might break.
Break to the downside is
Correct.
looking likely, yeah?
Yeah, it's looking likely.
So should I sell my...
You might actually be able to roll that whole position out. If you haven't sold the call already, you can probably roll this.
I haven't sold anything yet. I'm just sitting and watching.
Gotcha. The position.
But if it goes... Sorry, go on.
The position should be about net profitable right now. Like if you were to close all of it at the same time, it should have a profit in there.
No, it's down $9, I think, at the moment. So it's got a way to catch up yet. I need to consider the break even, don't I? So,
right.
No, it's down $4 actually. I think I've got a slight delay.
Oh yeah,
Obviously
right.
because I'm 6,000 miles away.
Yeah.
But yeah, so I have to consider that little delay as well. But yeah, it's $4 down at the moment for the so the PL is the overall profit and loss of the entire trade, isn't it? So if that's down $4,
right.
then I have to wait for it to make up that difference on the break even.
Correct.
But let's say the profit and loss went to like plus $1, then I could technically close out of it. But why would I want to close out early? Can I not just let it see what happens?
Right. You ideally want to see what happens. So you want to see where the range is going to be, and then.
Yeah. Okay. I'll hold off on doing anything for a minute then. Thank you.
No problem. And essentially, if we're seeing a trend here, if it trends all the way down to which it's about to tap $13 here. Oof, $12.98. You could probably ride that whole position, or if this continues to trend even more volatilely, you can actually go and just close the call and ride the put down until it's highly profitable.
And yeah. Okay. So let's just assume it stays bearish. Close the call, ride the put. Correct.
Correct.
So that means legging out.
Yes.
Thank you.
And we just crushed that $13 support zone. Let's see if we get a little bit more bearish first on the 1 minute chart. I just want to make sure it's going to continue to slide. Yeah, that's a long wick there. There it is. It might bounce up here, and watch what happens when price hits the 8 period, because that's going to be our critical mass, so to speak. Once it crosses that line, it can go and change its goodness, the word I'm looking for just escaped me. Change its sentiment. Yes, that's it. Let's see here. I want to make sure I've got enough scale to get out of that. I'm actually in a condor again on that one, but I was able to lock in some profit on that yesterday. So my cost basis on the entire position went from 27 cents when I opened it down to 15 cents by legging in and out of the short legs on that condor yesterday. And then before it closed, I legged back into it.
When you talk about legging in and out, all you're basically doing is saying I'm setting up one side of this condo, straddle, whatever, before the other one.
Correct.
And then when legging out, you're doing the opposite. So you're closing one before you close the other.
Right. When you
Thank you.
have a multiple option position, each position in that option strategy is called a leg. So ideally, you can leg in and leg out one part of that position at a time.
Brilliant. Thank you.
Seems to be hovering around 13 bucks. There we are. It might just actually reject the 8 period here and keep running, but give it a moment. This opening range is kind of where you'd rather watch and see what the range is going to be before you go and close the position. You want to make sure you're going to have some profit in there before you just up and close it. And if you can leg out of it, if this were to trend and continue bearish through that $13 support zone, the next support level we're going to have to go find. Let me go look at that real quick. Fortunately, when I draw on a different time frame, it carries over to all the chart time frames. So about 1280 is a likely target if we crunch through that $13 support. There we go. Oh, just realized I'm sitting in the dark. There we are. I got the shades thrown open, so I got some sunlight in this room, but it's there's a little bit of overcast. See, so I'm going to set up a scanner eventually here on. I want to find stocks in about the same price range as Ford, but with high options volatility, and I definitely want to see some weekly options on that. So I'm going to build that later on today, and then we'll see if we can do a search in the afternoon to figure out a couple other equities we could watch and make this trade strategy with other than Ford, because eventually Ford will probably sit in a range for quite a while and accumulate. So the volatility will get less and less and less, and the movement will fade to the point where strangles would no longer be appropriate, and instead you'd rather day trade directionally when it's in a range like that. So being that it was volatile all the way through that that bearish reversal at the top of the 2-hour chart when we had that big old diamond pattern, it took a long time to do that, but that range was nice and volatile, and it gave us plenty of opportunity to make appropriate profits on strangle positions. But now, if you look left, if we break that $13 support and come down to about $12.80, there's probably going to be a period of accumulation for at least a few days on that. So that's where your directional day trades would be appropriate. And then towards the end of that, if it decides to start to trend a little bit, we can go and start playing with strangles again, so we can make sure we capture this bearish move here. Or the other option is you could go into debit spreads and ride momentum down with a debit spread, and I can teach that as a different strategy other than strangles as well. But the idea behind strangles in the first place is also to help get new traders into a practice of being able to execute these trades, but also remaining the least risky position to get into as a new trader. So you're not going to, basically blow up an account just to learn. This keeps it so that you're much less likely to blow up an account or do any harm to your account balance while you're learning. So this eliminates a lot of what we call traders' tuition, or the amount of money people lose before they start to become consistently profitable.
I'm just sitting here praying to the stock gods that Ford crushes and we get a huge drop. That'll really help me out big time right now.
Oh yeah.
Same.
And I'm just gonna wait a little bit longer.
Well, I was trying to set this up on my mobile. First time I tried on the mobile, and there are some things that I missed. Like I didn't mean to get this week's expiry. I meant to do next week's.
Right.
Because it's so different on the mobile versus on my desktop. And also, I forgot, for some reason, it set automatically 10 contracts, which I meant to only do one. But when I bounced back to look at the stock and I came back, it reset it back to 10, even though I selected one the first time.
Right.
And I didn't realize it until I was all done with both of them. Then I was like, oh, crud. So, yeah. So, we'll try to work out of this year.
It gets easier. And like I said, this is a great way to practice and get this not only the strategy down, but get the feel for how to operate your broker, how to walk in and out of legs, how to open and close positions, obviously. And it just provides such a low amount of risk involved that it's beneficial if you're just learning to trade options. You're not going to have.
Yeah, and it wasn't too bad. I mean, like I
loss.
said, I got in at 4 cents and 5 cents respectively, so it wasn't like that bad if they expired or whatever.
Right. And then even with this strategy, I mean, if it's done well, I mean that volatility the other day where I netted a 580% return, that happens. It feels unreal, but I mean, if you're quick and you start getting into the groove of being able to adjust the trade correctly to take advantage of that kind of volatility, man, it is just one of the most highly profitable ways to enter a trade when you're in a neutral position, and then you can go and catch volatility like that, and it goes so far, your put goes so far in the money that it doesn't matter if you forget to close the call, because it'll be wiped anyway. But the overwhelming amount of profit on the put in that scenario, I probably could have closed that whole position as a whole instead of legging out of that call early in the day. I probably still would have taken probably at least a 490% return on that, because if I lost 100% of the call, it wouldn't matter. All right, there's a pause, and now we're looking for a 1-minute tweezer top right here. I'm going to keep the 5-minute chart on board, but those lower wicks here on the 5-minute chart would suggest that this is likely to bounce here, but let's let this play out a little bit longer. SPY is just starting to trend over, and this is looking like we could get another measured move. A fourth leg, if you will. So let's resume here, or review. We've got
A fourth leg down, you're saying there?
Yeah, it's not likely, but we can trend for a while, that's for sure. So we've got a first leg down, occurred on the 13th. All right, there's one leg, accumulation. Second leg started on the 15th and continued through the 16th. Then we got this accumulation. And then yesterday we had a third leg down. Now there is angular support down here. We could trend right to it today and probably wind up right around 372. I would assume that area would be about where the support would be, just by this angular support based on that long descending channel here. So very likely that SPY can sit there and technically form a fourth leg, but it's likely to have a relief somewhere down there where it'll bounce back and give you that V-bottom effect. But man, you get into the daily chart and it's pretty interesting. Looking left to that gap that we filled basically yesterday. Our next key support level is at about 372, so get below that, and then we have 363 on board for the next support level. In fact, I'm going to start marking that out. Because if SPY remains bearish here, man, it's not good for pretty much the whole market, and then we're going to have to start changing our moniker to how to trade profitably in a bear market. This has been a bear market for quite a while here. All right, so critical support today is 372. Momentum's a little slow, volume's a little low. And I thought I remembered, Seg was saying like JP Morgan was calling the market bottom. And then he was went on to say, I think they're just trying to do this to entice retail traders to get in order to provide liquidity for all of their institutional traders. That does make sense. Why else would they say something like that? You don't call the bottom, especially if you're a big financial entity. All right, Ford, give us a little range here, would you?
Jeremy, what are you using for your charts?
The screen I'm sharing is my Webull app. This is the desktop version of Webull.
All right, cool.
Is that what you use to do all your technical analysis, Jeremy?
I do. It's
on price action.
It's a very versatile application, and it doesn't require as much resources as TOS. So I've always been more interested in Webull than TOS, even though I've thought about opening a TOS account for a long time, many times. And every time I do, someone finds a reason to complain about it, and it just kind of turns me off of it. So I've been sticking to Webull, and it's been great. I've had very few glitches with it, and it's just, it doesn't demand a lot of resources, and if you open an account and fund it with even a couple bucks, the data is free, and it's all live data. It's not delayed.
Do you actually trade on that as well? Is that your brokerage?
I do day trade on this, and
Okay.
mostly what I have done here is this account that you're seeing here is my wife's account. I use that as an investment account for my kids. So anytime they go out and buy a game made by Microsoft, I make them save enough money to buy the game twice and invest that amount in Microsoft and other companies that they buy from. So essentially, this account's just kind of kept here to accumulate stuff. And every once in a while, if they get 100 shares together, I will sell options on it. But for the most part, it's just kept as an investment account, and I use that as my data here. But my day trading that I do with it is on my Webull account, and that I just do on my phone. So.
Not available in the UK.
Yeah.
That's all right. I'm used to it.
We're also working on. We're trying to form a partnership with someone who can provide us with an API to operate on our website, and we're trying to make sure we fine tune it to one that is more internationally available.
Well, Klaus Schwab, I shouldn't say that. Charles Schwab, sorry, is partnering. Well, it's not partnering. It's got a takeover for Ameritrade, and I think they're due to try and roll out the Think or Swim platform to the Charles Schwab investor brokerage, which will be available in the UK. It's going to be sometime in 2023, they think. So I'm keeping my fingers crossed.
Okay, very good. All right, so we're getting a little double bottom here on a 1 minute chart for Ford. There's a support level involved here, and we're going to see if it holds that. Let me start drawing some lines again. And I'll just use these lines. There's 1298. It's just wicked it now. And when you see these double bottoms, it's pretty easy to set up your trade plan. So if you're going to go bullish on them, you look for a resistance break, which is right here, about 1306. And then you look for your support, or your first target after a resistance break, which isn't much, 1309. This just to give you an example of what a double bottom trade plan would look like. And your second target is always going to be whatever control candle you see to the left. That's this guy here, 1311. And ideally, if a double bottom is going to break bullish, it'll start trading to these levels pretty readily. But the moment it rejects one, especially if it's in a bearish trend, gives you kind of two opportunities. You can go bullish to the bull targets, and then when you see rejection and you're clear that it is rejection, it starts to break. Or let's say it rejects up here at 1311, and then it starts to break down below 1310, 1306. You can then flip that into a bearish position and ride the momentum down. So oftentimes when you see these double bottoms form like this, you'll get a pull right up to that target and then a rejection eventually. In this case, it looks like it might just be trending beyond that support. The other thing to know about double bottoms, though, is they can have angular support. That's quite frequent, actually. Doesn't change the price targets, it just gives you one more or two more sometimes. And that one is right here. So this becomes primary resistance at 1301. And the idea is if you break that resistance, you watch for a push up to the second resistance, 1306 here. And I trade these in futures all the time. When I'm trading that 10-second chart, this is probably the most common pattern I look for. Is I look for a trend break where it pulls back like this. And if the long-term trend is dominantly bearish, like it is here on the 5-minute chart, is pretty bearish, I would look for an opportunity to take profit on one of these support taps and then get back into the position on one of the bull target rejections and continue to be bearish on it. Got a case of the yawns today. I gotta take my allergy meds. All right, so watching that 1 minute 8 period, we're seeing that it's still looking to trend bearish, but at some point, if we see a bar push through that 8 period, we'll know to start putting the rest of our trade plan together. And the next key support zone, we don't see it yet on the chart because for some reason I can't drag the chart down like I would normally be able to do with a futures chart.
By dragging the axis.
Right. It won't let me drag the axis. But we know that the red zone down here, or the next pivot, is 1280. And that could easily leg down to that. Five more pennies. Let's see if we go. My camera's been moved. We have cats in the house. They love doing stuff like that. Oops, I have a message. Never mind. Nothing important. Okay. Looks like we're going to trend one more time. Another pattern that I also look for when trading anything is you got a descending wedge here. I'll go ahead and draw that out eventually. So if we get any break out of this wedge, we can expect at least a short-term reversal. But these descending wedges don't always break bullish. There's the 60-40 rule. The 60-40 rule is simply this. I mean, if it's a descending wedge that usually you expect it to break out bullish, it's got about a 60% chance of actually following through with a bullish breakout. But it also has a 40% chance of failure. It's not a good margin to just jump into. You want to make sure you trade the break rather than trade the setup. Unless you can come into a neutral trade in the setup using the price action. But there's your bullish break. Oftentimes these will fake though. They'll pop out. They'll do a 50% retracement of the channel, which we already have a mark right here at 1301. That's our pivot now. That would be a 50% retracement on this little wedge. That would be the breakout expected. If it gets beyond that, sure, it can go and walk up to all those targets we set up above. The likelihood of that is a little slim though, being that the general market is also pretty bearish. Yeah, I'm looking at the comments on the YouTube channel here. Someone commented, Ford's $129 billion debt, a cause for concern. It will hit hard by high interest and high inflation. We expect massive Ford layoffs. High interest rate is one thing, but what was the month-over-month inflation for the last time they were saying it was what, about 8%, something like that?
That's just the official one as well.
I gotta wonder if inflation is outpacing the interest rate that you pay on a loan, does that make the net bulk of that loan worth less to the bank? Kind of interesting, because if you think about that, okay, if you have a massive amount of debt, the dollar value is going down, but your interest is compounding on that account. what if the the inflation rate is higher than the interest rate? Does that mean you're being paid to be in debt?
It erodes the debt, doesn't it? If you've got high inflation, that does erode debt.
Quite a bit. And my concern would be more with the banks going down because they're out a lot of money. They got a lot of money lent out to a lot of people, more than just Ford. And the amounts of that debt, if the interest rate on that debt were to be fixed, like particularly with everybody and their mother who had refinanced or even financed their first home at 2%, 3% through the whole artificially reduced interest rates, and now if inflation is outpacing that, does that mean
Hello.
the bank's loan is worth less and less and less every day? Where is
Good
that
morning,
money coming
guys.
from? Morning. Hello. I had somebody there.
So
Yeah,
we're
that was me. That was me, Ricardo from Canada. I just
Oh,
figured
hey.
out how to use push to talk.
Gotcha. Welcome. Yeah, it's a tricky thing to do with the Discord channel. I get that. We do have a tutorial on how to use that. I think Seg produced a video.
I didn't know I had to set a let's say I'm using the space bar push to talk.
Ah,
I didn't know that until Casper showed me how to do it.
right.
So what you were saying about the debt then, do you think that the inflation rate is going to raise Ford's debt to the point where it's not a concern? Or are you worried about the effect that it's going to have on the bank that's holding a debt as a
Right.
liability on their books?
So that's the interesting thing because, I mean, at what point? I mean, it wouldn't erase the debt. It's just that it would offset some of the interest against it. So I know a lot of times, like let's say if Ford goes into not default, but they go into forbearance on that debt, I gotta wonder if, even though the interest rate is being compounded on that amount, and of course they have to make a bigger payment because it's just going to accrue for however amount of time you're in forbearance, you have to make a massive payment on it. But that doesn't necessarily offset a bunch of that balance if they did go into forbearance on that. So I got to wonder if they're going to attempt that, and then I've also got to look at. I would love to find out who's holding the note on that, because that would be a bank that I would consider shorting just because of the inflation difference. That's a lot of outlay.
Would that be corporate bonds that it would have issued in order to be able to get that debt? So whoever would have bought those bonds would be the ones at risk now.
That would be it. And then let's
So
look
you
at
need to find out who's bought those Ford corporate bonds, yeah?
right. And
Ah, I see.
I know there's a junk bond ETF called HYG, and that, well, you can see how bearish that's looking. They hold a lot of notes. But I gotta wonder where's going to be the balance. I mean, at some point, if interest is going to be high enough, it's got to be somewhere around the 9-10% just to make the debt profitable to the bank. I don't know. I'm gonna have to talk to somebody a little bit more educated in economics than I am, because I got a lot of questions on that. So let me see.
I have as well now I've got this trade on. It's funny how you really focuses you when you've got real money in the game as to what companies do and how everything works in the world of economics.
Oh yes. And I'll admit I'm not a whole lot educated on that sort of thing when it comes to that whole question of who's eating the inflation on this debt. There's a link to the how to use the push to talk button on Discord that we've I think Seg made that video not too long ago. So if anybody else is having trouble figuring that out, that video explains it very, very well. All right.
So are we assuming that Ford is following that bearish trend all the way down now then, yeah? Oh,
think so.
obviously not assuming, but that's what the analysis would suggest.
Right. We seem to have wicked into about 1291, and we're just starting to cross back above the 8 period. Let's see if this gives us a little bump back to the bull side. and hopefully we get a range in here where we can leg out with a net profit higher than we would if we just closed the whole position. But I think your puts should have outpaced the loss on your calls by this time.
It broke even at one point, but it's back to being $2 down at the moment. But again, this is because I didn't get that exact perfect price. It took ages to get filled as well. I don't know if that had an effect. It doesn't have an effect on the price that you pay getting filled, does it? Or how long it takes?
Depends on how you filled it. So if you filled it as a net position, like you filled both the call and the put at the same time, and with a limit order, that might have been a bit of an issue to get filled up. Probably why it would take forever to fill. Ideally, if I was to have legged into this yesterday, I would have used, at some point, I would use one of these bounces here to leg in. So like I would have, bought the call when I saw a quick short-term reversal here, and then buy the put right up here. And if you walk into it, you'll get enough of a cushion between the two where it'll be a net positive position by the time you've got both sides of that position open.
That makes sense now. That didn't make sense yesterday when I was putting everything on because I was too busy concentrating on putting the trade on to take in what you were saying. But now I can see what you're saying. So you basically buy at the lowest, buy at the highest for the put, or is it the other way around? So that you get that margin of cushion in between, don't you? So you get the best
Right.
of both worlds on both trades.
Exactly. And that's the whole point of doing these one leg at a time. And
I see the details now, yeah.
that's where that practice will really benefit you. So like eventually you'll be able to take and capture that profit cushion between the two legs of your total position just using price action. It does take quite a bit of time to understand the price action enough to be able to do that efficiently. But once you do, it really makes a difference in how this trade works out. And then, as I was saying, later on when you've got all that practice down and you want to take it to the next level, that's when you can start legging into the short positions on the outside of the net strangle.
For my next strangle, then I'll see if I can get that cushion set up nicely.
There you go. Hi, everybody. Out there on YouTube, we're at a little bit of a delay compared to our live Discord channel, just to let you know. But I am paying attention to the comments both on the Discord and on the YouTube channel here. All right, so it looks like we're going to attack that pivot again. This is the next target here. So we went from the first double bottom to a second double bottom further down. We broke a descending wedge. We've made a 50% retracement with the top of this candle that's forming right now. And now we see if it's going to continue down bearish or if it's going to walk back into a range and give us an opportunity to establish a range that we can leg out of our position for a greater profit. And it looks like SPY is kind of following suit. So on a 5-minute chart here, why do I have two 5-minute charts? Just realized that. So essentially we're looking for a quick pause in this trend, which we've got right here with a bar through the 5-minute 8 period. And we've got trend walking up on top of the 8 period on the 1-minute chart with the 8 period crossing above the 20. So this counts as at least a short-term reversal. And we're likely to see a push to about 376 here, which is where the next key pivot is for this momentum here. Let's see if I can get it close enough. There we go. Oops. The only caveat I have with Webull is you've got to click on a chart, click on a line you want to draw, and then click on the line again. For some reason it does that. I don't know why. It might be a user error. Alright, there's a nice clean pivot touch right there with a hammer. Let's see what happens next. And we'll keep a close eye on SPY too.
Hey Jeremy, are you still trading the E-mini?
Not as much for the past couple of days. I've been focusing on my options trades, but well, during my streams anyway. But I'm still trading it when I have some time to myself. It's doing pretty good things with it. Just a little scalp here and there. I'm going to look into running a little bit bigger of an account with that. I know I can do very well with a small account trading the E-mini. I want to start looking at consistently trading just ES contracts instead of MES contracts. So I guess the MES is the micro and the ES is the mini. All right. So far we've got a little rejection on that pivot there. And that would be, if you were trading this as a double bottom, this would be better on a bearish setup than a bullish setup. We'll see what the next couple candles do. If we remain on top of the 8 period, we could trend back up to the next set of targets here, but I wish I could draw horizontal lines with this app that I can extend but not have them go across the entire chart for weeks and days. Back to forward on a 1 minute chart. 5 minute chart, sorry. I see my lines are crooked. Close enough. Just if I were to put a bunch of pivots there, it would make my chart pretty messy. You know, sort of like my SPY chart looks here with the daily chart. It just gets like more lines than Charlie Sheen's coffee table. Oh, that was that was bad.
I caught that one.
Oh man. Sorry, I used to cut up about that. We can all have a little comedy in our lives. A sense of humor is not dead in America, at least that. It's suffering, but it's not dead yet. There we go, nice roundy. All right, we're coming through that pivot. Let's see if we continue trending. So this is where you would take profit on that put and then ride the call back until this ran out of momentum.
You're not suggesting we do that now, are you?
Considering it, because we're starting to swing back up into that trend. Looking at about a 1310 would be a target on this if it continues. Looking at the 5 minute chart, it's very probable to hit that level. And SPY is kind of getting rambunctious here too. Let's see, SPY's looking for a push to 377 here. There he goes forward. Alright, so in my position, my condor position, I went and closed the short call on that. And then I will go and sell it again for more than I bought it back for and continue rolling this. At the same time, I can also go and buy back that put when price gets rejected at one of these resistance points, which it might even do right now. Let's see. see, on my call side, I had about $3 per short call profit in that move right there, buying back the short contracts, and the put is at break even right now. I might see some profit on closing that put leg in a few moments here. And this is the short legs I'm talking about.
I'm trying to work out whether to do the same on mine.
Looking at the thing is that when you get this opening range, if it establishes a range, you simply put your pivot points across the entire chart at that point. So I'll put them on the 5-minute chart here. The idea is if you see it range once, it'll typically range twice, unless it forms a clean reversal pattern. So like when we were looking at range trading this, let me go back in history here before the breakover. There was a good day for it. So on the 16th here, we saw that it opened, came down to a low point, and it walked in this range twice. So when you see that opening range, oftentimes you can gauge what you can expect later in the afternoon. And if you're trading a long strangle, being that you bought to open both legs of that strangle, you would then essentially establish that range, and it was actually right in the pre-market where we got the resistance point. So on the open, you could close your put down here for a profit and then wait to close a call here, or you can wait till later in the day. You'll have a little less profit because implied volatility will be lower, but you could wait till later in the day, close the put down here and then call up here, or you can, if it's riding momentum like it did, you can ride that call a little higher towards the close. So the idea is whenever you see a range established, I just moved my pivot again. When you see a range established, and I moved another one. One of these days I'll learn to lock all those damn things. But when you see a range established, you always want to expect at least a wiggle back into that range. Oops, I gotta close that put real quick.
So my put is $2 down. Should I still close it, even if it's not profitable?
On yours, I'm closing my short legs. I'm not closing the long legs. So on yours, you're gonna wait until you get a break here. And
Okay, so I'll wait.
if you can take profit or a little less loss on the call side right now, you could do that and then ride the put on momentum. It's looking like SPY is starting to set up for a bearish return to support, so give that a minute to break that channel, and I think you'll have an answer there. So that way you get rid of any drawdown on this position by closing the call and riding the put, but you want to make sure that momentum is going to continue and give you enough range or movement to make it profitable. So SPY just broke a little rising channel here. First target is going to be about 374.90. And that is just looking at a 50% retracement of that rising channel. Okay, now I am in a strangle, and my cost basis is let's see here, now $12 risk per strangle, because I've used the short legs to make profit against my cost basis. So I started with 27 cents per, and now I'm at 12 cents per. So I was able to capture $3 profit from buying back the short call in the bottom of the chart here, and then that weighs against my cost basis on the long position. The put side I was able to close for a break even. So what that gives me is an opportunity later on in this range. I can go and sell to open those short legs again and do it all over again. And if everything works out right, by the time Tuesday comes around, with the expiration on the 30th, that would be Tuesday this coming week, my position will either be free or net profitable, meaning that you can't lose. So kind of a cool thing to be able to do with this strategy as a next level thing to do. You can roll it, you can maintain it open, you can roll it out to the next week and do it all over again. It just gives you a lot more opportunity to adjust the trade as it goes without having to leave the trade.
Okay, so my put was in the money there slightly. Is that a good time to close the put and then ride the call?
So at this point, we're looking like a little bearish rejection here off that pivot. And I think we're at least going to visit the next low here at about 1297. So if you've closed the call already, ride that put a little bit longer.
I haven't closed the call. No, at the moment the call is $4 down. The put is breaking even.
Okay, so you're net $4 down.
Yeah.
Gotcha.
So just wait for a minute then, yeah?
Yeah, you might wait for the next range swing on this because it looks like it's gonna probably be a little shorter range than we'd like, but at least if we can figure out where it's likely to go again in the afternoon, we can walk out of that with either a break even or a net profit.
Are you all short these options or long these options?
So I'm teaching both strategies in one, so it is a little confusing. I apologize for that, but you can be long on the strangle, as Victoria is here, where she's just got one long call and one long put, both of them out of the money or at the money in this case. And I'm also simultaneously teaching an advanced version of this where you go and you sell short calls and short puts against the long calls and long puts. So you're literally using an option to leverage an option. And what that does is I can take advantage of the price action in the same way that you would a strangle, but I can do it more efficiently because I'm retaining profit buying back those contracts for less than I sold them for. And I can rinse and repeat those daily without ever leaving the position. So if we have a major breakout like we did the other day, I'll still be in a position from the previous day with reduced costs from selling the short options, and I would have a much higher return on a breakout.
Hey, Jeremy.
Yeah.
I'm extremely confused with the profits for a strangle. So I put my paper trade in for Netflix on TOS, and I guess their paper trading system, if you don't have an account in there with $500, is a nightmare because everything's
Yeah.
delayed. It's just horrible. It won't let me like close it. I can't figure out if I'm making money or losing money, and then I guess just in general. So if you do a short strangle, you get credit.
Right.
Why can't you just close it immediately and keep the money?
You can actually. So if you sell a short strangle, you'd have to sell both legs negative or both legs naked, meaning you'd have to sell a call with no cover. So if price ran against your call or ran away from your call, your put is going to have a cap for how much you can gain from it, but it's also going to be the limit for how you can lose on this, because if you're short a naked call, your risk is theoretically infinite. And if you sell a naked put, I mean, if you've got cash in the account to cover it, it's technically not a naked put, it's a cash covered put. So your loss is limited to the amount of the strike, well, minus the premium you were paid for it. And if the stock goes to zero, your loss is capped at zero. So you wouldn't want to enter a strangle as a naked position like that unless you were day trading it. And if you were to do so, ideally you would essentially hope for a flat range, but enough volatility in the open to produce a high implied volatility long enough so that the volatility crush or volatility fade as the day gets long towards the middle of the day, you would take the difference. So you would open that as a credit, run it to the middle of the day, and then close it just as a net. But if price suddenly ran away from you, like Netflix got news that they've got something going on that makes their price jump and close that gap that we've been looking at on the daily chart, kind of licking our chops at for a while now, you could be in serious trouble having a naked position like that. With the way I'm able to advance the strangle position by turning it into a condor and then having the short legs adjustable where I can adjust in and out of those short legs over and over and over again, it's a much safer strategy because your loss is limited to the width and the spread. So like whether it was a credit spread or a debit spread, the difference between the two strikes is your risk minus either the premium received or the difference in premium spent to enter the trade if it was a debit spread minus the width of the spread. So the idea for me is to be in a position where I'm long and I'm using the short legs as leverage to offset my cost basis by trading in and out of those short legs and keeping the position open for a long time. And the idea is I can beat time decay on this position because I can use that liquidity in that range to offset enough cost to where I'm ahead of time decay and I'm net gaining profit in this position, if that makes sense.
Not at all. I'm totally lost.
I'm gonna have to put that in writing, I guess, to make it a little easier. But for the time being,
I wanted to know, so I sold a strangle for $600.
okay.
Why can't, when the market opens, I just buy it back, or for I guess I'm buying it back for less? That's what I want to do.
That's the idea.
I'm thinking in my brain that I'm getting a credit and I can just walk away with the credit.
So you mean just open it and close it immediately?
Yes, that's what I
Okay.
assumed, but I guess that's not how it works. I guess, so you get the credit, but then if you have to buy it back, you have to pay the whole credit.
Right. That's the problem. So if you were to open a naked strangle like that, selling to open for a credit, yes, that credit is immediately put in your account. But if you need to buy it to close it, of course you're going to tap into that credit. The idea is if you're going to open a naked strangle like that, your goal is to absorb time decay in that and or implied volatility crush enough to make it a profitable position. So you open it for a credit and then you buy it back for less than you were credited. So essentially you're selling it high and buying it back low.
Okay, now I get it. My brain was just, I guess it's just early.
I went on a tangent
Jumbled.
too, explaining the advanced version of the strangle too. So
Yeah, I couldn't even figure out how to close it on TOS, and I've watched the videos. It's a mess, this thing.
yeah, that's the other thing I love about Webull is you can paper trade options in Webull a lot more efficiently.
But I made $340, I think it's saying.
Sweet. That's a bonus. And looking at Netflix, that nice Morning Star. Gosh, if we can get back above that 240 again, that would be some happy news.
All right, I'm out. You guys have a good day.
You too, man. Enjoy and thank you again for doing your part to keep our country safe.
Take care.
Thank you.
Yeah, I'm kind of a little bit spun this morning too. My brain's not all the way here today. Need more coffee. Coffee ground. All right, well, that's our range. Now we just want to wait and see if we can leg out of that with a profit. I'm probably going to sign off the YouTube stream, but I'll stay with us on our Discord stream until we can walk through this with a little profit. This range is kind of a little bit unexpected. I was expecting a little more momentum in forward this morning than range. At least to give us a wider range like we had yesterday. Not, fully as wide as yesterday, but at least half. It's not quite at that desirable range yet today. All right, I'm going to go start locking all my pivots so I can keep them on the screen correctly. Every time I drag the chart around, I'm moving the pivots, and it's no longer fun. There we go. Now I can't move them. Excellent. Okay, so on the 5-minute chart, we're actually creating a little bit bigger of a double bottom here. So we could get a little reversal and come back into these targets again. So let's see if we can make this profitable, especially for Victoria. We got to walk her through this.
Thank you.
You're welcome. And even if the situation is where you break even or you lose a tiny bit, this is much easier on your account than it would be to just go and try to trade this directionally for your first time learning to trade options.
I totally agree with you. I can see what you're doing with your strategies. You're trying to lead me down the path of, look, this is how to trade with the minimal of risk. So yeah, I thank you.
No problem. Yeah, that's the whole idea with this, is to minimize risk as much as possible, especially while you're learning, because this is nobody's market. This is a bear market, and this is a trader's market. So if you've got lots of skill trading this, yeah, this market's wonderful because it's got a lot of movement in it. But if you're a beginning options trader and you're coming into this bear market and you've just started learning this stuff, this is a kind of market that can blow your account up, and I want to emphasize that out there, especially into YouTube land, to let people know that we have strategies for any market scenario, and it's just a matter of using the right tool for the job to us. So if you're a little bit afraid of getting into trading at this time because of this market being bearish, just realize that if you learn how to trade options, you don't have to be scared of a bearish market. You can actually learn to profit from it. In fact, you can learn to profit greatly from a bear market. The only thing is you've got to be able to learn those option strategies and then be able to apply them. And we also teach using price action in order to make those options trade as efficient and profitable as possible. So price action's king in recognizing a lot of these chart patterns on the fly, because you're looking at a live chart. You can't just say, oh, it made this pattern, so it's going to do this. Not all the time anyway. But if you get to recognize these, you can actually literally just look at a chart, and without really thinking, you can form a trade plan and execute it in the same instance with enough practice. So it's kind of,
that's what I'm here to try and learn. That kind of fits in with what I was hoping for. So thank you. This is ideal.
you're welcome. And that's just kind of the thing that we can provide in this sort of market condition. I mean, this market, I know that I'm a little bit more biased to being a bearish trader, or at least so it would seem. I'm okay with being a bull as well, but this market to me looks a lot more bearish than bullish lately, and it's very difficult to trade, even for people with experience. But I'm staying ahead of it enough to be profitable. I'm still paying my bills, and I'm able to provide a service to everyone I can talk to about learning how to execute these strategies.
I made money in the last bull market during COVID, so I know how to profit from a bull market. That's why I'm here trading options, is to learn how to do it in a bear market. So
There
thanks.
you go. That's exactly our purpose. I feel a sense of accomplishment just hearing that.
Thank you. No, I feel like I'm in the right place, and I've signed up to this thinking, oh, is this going to be any good? And I've been here 4 days, and yeah, I'm learning a lot already. So yeah, I'm happy.
That's awesome. That's exactly the kind of the thing we want to do. All right, I'm going to try and locate a couple more price action strategies in SPY, and I think I need a 4-hour chart for this. Let me see here. Let's add a 4-hour. There we go. Now we've got cleaner sight lines on this descending channel. Let me compare to the daily chart. And also one more factor I got to do. I've got way too many tabs open on this computer, but I've got memory for days, so that doesn't phase it. Just makes it trip in and out of my shared screens once in a while, so I apologize for the flashing back and forth between my home screen and all this stuff. Log into my TrendSpider account and compare analysis on SPY here. I love TrendSpider because I can go back and verify all of my own trend lines and stuff. And if you haven't used TrendSpider, give it a try. I mean, it's definitely very, very helpful, especially to traders who might not have a good idea on how to draw clean trend lines and lines that actually work and make a difference in your trading on your chart. Anybody can put a line on a chart, but knowing exactly where to put that line and why, that's the important part. And TrendSpider does it for you automatically, but at the same time, you're going to learn a lot about how they work and why they're there. And then you'll be able to do a lot more of your own analysis a little bit more efficiently. So let me show you what a TrendSpider chart looks like when it's essentially unencumbered. So if it's just allowed to put every single line on the chart, I won't be able to put that on my YouTube uplink, but I'll put that right in the chat for you guys just to get a view of this. Now this chart has a lot of lines on it. But you can see that the important lines that are on it stand out and that they also look a lot like my lines. So the idea behind TrendSpider is to go and have all this automated line drawing done for you. And then you can go into shorter time frames and see what you need to see. Let me go into...
How much do you pay for TrendSpider?
let's see here. I actually, I'm an affiliate, so they don't charge me for an account. But
Yeah, we have a discount, correct? If we're a member of Bullish Bears.
we do. They are currently offering, I think it's a 30% discount. So if you go to our website, go to Tools, and then just drop down one of the tabs, it'll give you the discounts. And then just scroll down there until you see the TrendSpider logo and click on it, and that takes you right to it.
Yeah, I seen that.
And it is very handy. I don't know what their rate is or what the total would be with our discount, but I can look into that. Wonder if I can just share monitor and slide it over here. That's probably the way to go. Let me change screens in the Discord share here real quick. Hopefully this does not affect the resolution on this or the frame rate. I don't think it will. Hopefully it didn't change now. Let me go put TrendSpider up. And I can just drag the tab over here and pop it open. So here's what a TrendSpider chart looks like. And now you can see it over there in YouTube. And let me go for, I want a 15-minute chart. There we go. And anytime you have a line that makes sense to you, double click it and it'll highlight it for you. and it'll keep it that way. So I always go up here and go to more lines, or I can go to all. If you want to see all, it's a hairball. See, there's another
Now
one.
that's trade nasty.
Yes, sir. If I do say so myself. So I'm going to go and pick out all the lines that are relevant in this current market condition. And I'm going to see if they carry down to a shorter time frame. Now we're going to go to a 10-minute chart. There we go. Yes, they do. And what I'm getting at is I want to see if I can put on my own line.
Just gonna make a cup of tea.
Oh, sure. I've been meaning to switch to having tea in the morning, but I just love coffee so much. There it is. So a 10-minute chart will show me. Now let's go back to my other screen here. Don't have 10-minute highlighted, but I'm going to go to a 10-minute. There we go. What I'm looking for is a bearish wolf wave. Let's see, will this alt tab for me? No. Okay, yesterday's action, good. Let's confirm that. So I had my bullish wolf wave from the other day here, and price went right to that at the close. Wolf waves are awesome. Eventually I need to write a little bit more detailed of an article to explain the wolf wave, but for now, just know that it's pretty simple to go and look at first high in a trend, or highest high in a trend, first low, and then second high and second low, and know that you draw a line. If it's a bearish wolf wave, you draw a line down from the first highest high in a trend across the second low. It's actually here. Make this stand out a little better. And what it will essentially give you is an established trend, and then we can go and transfer that to a 5-minute chart, and we can see that it's been pretty easily predicting of what price action to expect on today's open.
So Jeremy, for the purple wolf, it's first high and then second high.
So first high and then second low for a bearish wolf wave. And then inversely for a bullish wolf wave, it's first low and second high. So let's see if we can transition this data to forward. That's going to take us further back, I think. There's just not enough movement there to see that. Let me go to that date with a 5-minute chart. It's so subtle. Yeah, it's not going to be enough established movement at the top of this trend to form a bearish wolf wave, but I bet we could find one further back. This was just angular resistance on that diamond pattern. That's what that was. So 1, 2, 3, 4. There is one there. Good. And normally the wolf wave doesn't have a color designation. I'm just going to coin the phrase purple wolf because I like to draw them in purple so they really stand out to me. No other reason. So first high in the top of the trend. That was the top of our diamond here, right? So high. There's your first low. There's your second high. There's your second low. This one's kind of skewed a bit though, so we're going to count this as one wave. So we're going to go first high, first low. Second high, second low is down here. Second high, second low down here. And I just kind of walked that roughly to where we're at now. So if we're going to continue trending and we go to break that pivot point, it leads us to a later target. And if you were to set a pivot out, my mouse ran away. There we go. $11.30 is going to be a ultimate bear target if Ford continues to be bearish. That's about kind of the mean of this accumulation from that previous extreme low there. If you look at well, let's look at a weekly chart. Let's correlate that with a weekly chart. You can see it kind of lines right up with the key point of price from before. So ideally, if you were trading this on a weekly chart for long-term positions on a bearish swing trade, this is just one giant triple top or one giant head and shoulders. So there's your left shoulder, there's your head, there's your right shoulder. Well, if you're looking for key breakpoints to trade, this is your shoulder line or your neckline right up here. Let's make that white. I'll make it bold. So ideally, when you saw rejection over here on this neckline, that's where you would have entered a long-term bearish trade, right? And we had that diamond top. You can barely see it here on a weekly chart. It's really, really zoomed out. But it gave us the exact setup on being a bearish trade. And then also, look a little closer, on a weekly chart, you get all these control bars, just like we do on a 1 hour chart or a 5-minute chart even. We find all the control bars in the previous trend, and it establishes pivot points or points of interest where price is going to kind of gravitate to. It'll be both a support and a resistance line in this whole scenario. So we see that our red line, or our low, down here at 1270, where we marked out today on the 5-minute chart, sits right at the bottom of that control bar. So we're very accurate there. Now we've got some other control areas of interest in a weekly chart down here at about $12.05 and so on. There's other zones. I'm going to put it at 12 because it's right there at the bottom of that bar. And the idea is, yeah, your chart's going to look messy. It's going to look nasty, in fact. And that's where we coined the phrase chart nasty. But you can go to closer and closer time frames, or shorter and shorter time frames, and you'll see the relevance of all those control zones, and then you can see what the candles did previous to that. And this is essentially what the basis of price action trading is knowing that the market doesn't always match, but it loves to rhyme. Well, it's always going to be very close to, or if not right on, those pivot points established by those control bars on the longer term charts. And then it gives you an idea of what you can trade or expect to trade for range on the shorter term charts. Since we're continuing a little bit of a bearish move here and we're setting up to be another leg, this is Ford's third leg down. If you count, this is leg 1, this is leg 2. We could set up a third leg and hit that $12 target. It's very possible. They've got some bad news.
I'm out of here, Jeremy. Thank you for everything. Good luck in the market.
No problem. Thank you. Same to you. So
I need to be paying attention here, don't I, Jeremy, to leg out of this?
right, a little bit, because we're looking at the critical point of this now is right there at that 1293. And if we start to build momentum below that, that'll take us to that $12 target pretty handily, with an expected pause where that wolf wave is and at 1280 where our next pivot is. So there's an intersection here, see? So if we start to break below 1290, hopefully you've established that you can get rid of that call and ride the put on that. But you want to make
I need to
sure.
establish what I need to sell my call at, don't I?
Right. That was the whole
Okay.
first point of it is to look for that high to sell your call ideally. But if you had to sell it now and ride momentum here, it's kind of setting up like it's going to follow through. Let's see, today is Thursday, so there's no options expiration today, so that's probably going to trend on us a little bit. You want to make sure it does crack that critical support and follow the trend for the best chance of profit on this position, but it's looking more and more likely to break that pivot. But anyway, that's the gist of getting into knowing where to put all these lines. Is looking, you want to look for patterns, you want to look for setups like the wolf wave is pretty important. And you want to make sure you know where all the control zones are. So when you're day trading, you just literally trade between the pivots. It makes you a pivot trader. Whether you classify it as momentum trading or not, you're still trading between pivots. You're just trading the momentum between the pivots. So as I get long in the tooth on this whole conversation, that's where it eventually leads, is to know what your previous price action was, to use it as a tool to measure where your expected moves are going to be. And this is grinding slow, but it's threatening that pivot pretty well. This is looking more and more like a bear flag here. Alright, so I'm going to wrap up the YouTube broadcast and we can get all of this in the last probably 15-20 minutes of the broadcast, where you want all that price action information that I was going through. And then everything before that is a lot of options speak. So it's like you can kind of pick whatever segment you need to go back to and reference stuff that we've discussed today and learned today and taught today. And hopefully that becomes useful for everyone. So out there on YouTube, I will see you guys tomorrow, probably later today as well. We're going to try and do that after hours recap one more time. I did one yesterday, just a short one, kind of looking through some of the equities that we're moving and trading, and just setups that we're noticing. And today, this will probably be more of a. We'll be talking a little bit about some trading psychology today, I think. So we'll get into how to maintain an attitude and a level of suppressing your emotions, so to speak, to just trade on what you're seeing instead of what you're thinking in a way that is profitable. So stay tuned. We'll catch you guys later.